Whether you're a first-time home buyer or not, buying a house with low income is possible. As affordable housing becomes more expensive and more difficult to find, many low-income Americans are searching for ways to buy their own home. So, how can you buy a home if you have a low income? One way is through government-backed programs. The government created several programs to make buying a home a possibility with low income. If you qualify for these government-backed programs, you'll benefit from more flexible requirements, reduced rates, and lower payments compared to conventional mortgages. How to buy a house with low income? It's important to familiarize yourself with all the options available to you when you're buying a house with low income. There are many different loan types. Although the standard loan type is known as a conventional loan, there are many alternatives that make it easier for low-income home buyers to succeed in their first home purchase. You have several low-income loan options to choose from, all varying in requirements and benefits. You may also qualify for more than one of the loan options. To help you navigate your loan possibilities and see which one is best for your situation, here are the different government-backed loan programs in detail. FHA Home Loans. FHA loans are by far one of the most popular loans, as they are specifically tailored for low-income buyers, those with lower credit scores, and for first-time home buyers. FHA loans loosen the requirements you would typically need to meet. For instance, to qualify for a mortgage, you would typically need a debt-to-income ratio of no more than 43%. And lenders generally prefer a debt-to-income ratio under 36%. However, you could potentially secure an FHA loan with a debt-to-income ratio up to 45%. FHA loans also have more relaxed standards when it comes to credit scores. You could secure a loan with a credit score of 580. Some lenders will even accept a credit score as low as 500. Granted, with a 500 credit score, you'll have to make a 10% down payment. If your credit score is high enough, you only will need to pay a 3.5% down payment. This can be incredibly helpful for those with lower incomes or minimal savings. Home Ready and Home Possible Advantage. Both the Home Ready program from Fannie Mae and the Home Possible Advantage program from Freddie Mac offer low down payment terms. If you qualify, you'll only be required to pay 3% as a down payment, compared to the standard 7% to 12% down payment. As another benefit, you can obtain the down payment funds from gifts, loans, or grants. Home Ready and Home Possible Advantage also offer discounted mortgage insurance. While typically you would pay 0.95% per year in mortgage insurance, with a credit score of 720, with these programs, you could pay as low as 0.65%. Another benefit is the home seller can cover closing costs up to 3% of the purchase price, alleviating some financial stress from the buyer. USDA Loan. A USDA loan helps you purchase a home in rural areas. And before you discount this loan, you may unknowingly qualify. Typically, areas with a population under 35,000 are considered rural. If you do qualify, one of the biggest perks is you can purchase a home without a down payment and 100% financing. The USDA offers two loan programs, Guaranteed and Direct. Which program you qualify for depends on your income compared to the median income in the area you want to buy. VI Loan. You only qualify for the VI loan program if you are a current or former military member. A VI loan doesn't require any down payment or minimum credit score. You can finance 100% of the purchase price, and there's no mortgage insurance. On top of those benefits, the loan allows sellers to pay up to 4% of the purchase price in closing costs. Good Neighbor Next Door. The Good Neighbor Next Door is an incentive program through HUD. The program offers law enforcement officers, firefighters, emergency medical technicians, and teachers the opportunity to buy a HUD foreclosure home at a 50% discount. Note, the 50% discount is in actuality a second mortgage. However, you don't pay any interest or payments on this second mortgage. And if you live in the home for 3 years, the second mortgage is cancelled. Personal loans. Rather than financing with a traditional mortgage, you can use a personal loan. You can use a personal loan to pay a below market price for a home that has had trouble getting financing and no one is able to take a loan out on it. With a personal loan, the home isn't the collateral. This means the loan isn't dependent on the value of the home and makes getting financing easier than going through a conventional mortgage. Mortgage credit certificates. Depending on your particular city, county, and state, you may be able to take advantage of mortgage credit certificates. If you meet the requirements, you can receive a tax credit that allows you to increase the size of your approved mortgage. Lenders consider mortgage credit certificates as income, granting you the ability to buy a higher-priced home than you might otherwise be able to with your income. Down payment assistance. To help you purchase your home, you can receive down payment assistance, usually as a grant or loan. You can get down payment assistance from charities, local government agencies, and employers. Check locally as there are over 2,000 down payment assistance programs across the nation. Down payment assistance programs typically have guidelines on who qualifies. You will have to earn below a certain income, and many only assist first-time home buyers. On average, you can receive around $12,000 in down payment assistance. Manufactured or mobile home. A manufactured home can be a more affordable choice for a low-income buyer. Most manufactured homes can be purchased with conventional mortgages. Mobile homes, however, are not actually considered real estate. In this case, you can use a personal loan rather than a true mortgage. Can you get a mortgage with low income? Yes, fortunately low income doesn't rule out the possibility of homeownership. Even with low income, you can get a mortgage through one of the many government-backed loan programs. Though of course, even with loan assistance, you still want to be prepared for the costs of buying and owning a home. You'll need to cover some closing costs, at least a portion of the down payment, ongoing mortgage payments, insurance, and more. So while loan programs and low down payment programs help tremendously, you still want to make sure you get the best bargain on your new home. To help ensure you save as much as possible when buying your new home, work with an experienced real estate agent who can negotiate the best price on your behalf. Your agent can also help guide you on which loan program would be the optimal choice for your situation. If you know of a program we've missed, please let us know in the comments.